Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today we're going to talk about only one company, a KRO favorite called Arizona Gold and Silver, and how one should look at it in a context where gold keeps making new highs, but everybody is frightened on the sidelines wondering, is this for real? Will it vanish? What should we do?
Yeah, John, gold made another new high, this time breaking $2,400. In a recent Kaiser Watch episode, you mentioned favorites Solitario and Westvault as gold exploration and ounce in the ground extremes of the gold junior spectrum. Where does favorite Arizona Gold and Silver fit in this spectrum?
Well, Jim, the Solitario Resources Corp and its Golden Crest project, basically they are a target on the west side of the Black Hills in South Dakota, an area that has never been drilled, which has looked uninteresting for 100 years. And from what they're seeing with surface sampling, there could be an extraordinary gold deposit, tens of millions of ounces present. But until you drill, you don't know, and Mother Nature can be very cruel, and there may not be much in the third dimension. Westvault mining, on the other hand, is at the other end of the extreme, where it has its 560,000 recoverable ounces, all backed up with a pre-feasibility study, all the permitting done. It's a shovel-ready project, and they are now just waiting for somebody to want to buy out the company. When I run my cash flow model on that, well, it's well into the money, and if gold ends up at $3,000 plus, then it is super in the money, and we're just sort of waiting for the market to start believing that this gold uptrend is for real and not just another fake out. In the middle is another category of company, one which does not yet have documented ounces in the ground, but has done sufficient work to show that we have a significantly mineralized system. They are in a position to produce a resource estimate later this year, the first one ever for the project. And they also have substantial expansion potential coming once the BLM grants a permit and allows them to also test for a bulk tonnage scenario where they can go into the potential millions of ounces, not just into the up to 1 million ounce high grade underground type of scenario. Now, gold this week did make a new high, $2,400 overnight, but today it actually got crunched in the GLD ETF. It was down about the equivalent of $28, $29 per ounce on very heavy volume. It'll be interesting to see if the ETF lost gold or managed to gain gold on this. This came on the heels of the latest inflation report, which showed that the 12-month CPI for March came in at 3.5%, up from 3.2% in February, which itself was up from 3.1% in January. So the trend is that inflation, after coming down from 9% in 2022 and sort of stopping at 3% level, is now starting to bounce back. And that caused the interest rates across the term spectrum to rise as the market started to settle in with the idea that interest rates, we may not get those 3 cuts that Jerome Powell promised in the second half of this year, because inflation clearly is not easing. And the stock market, the general equity markets, the Dow, they also had a very bad week, from 39,807 on Friday, March 28th. It lost 1,824 points, down 4.6% on the week. Even Bitcoin managed to go down as the market looked and said, okay, we may, if these interest rates stay high, we may see a major haircut for general equity markets. And of course, if you can put your money into 4 to 5.5% T-bills, why would you buy gold? And yet gold continued to go up, which is the interesting story. Why is somebody buying physical gold when they could be buying T-bills, which clearly aren't going to go down. And of course, the U.S. dollar, it continued to stay at the same high elevated level it has been for the last decade or so. So all the reasons for gold going higher are not in place. And the idea of inflation, well, we've had inflation for quite some time, and it didn't make gold really go up substantially. So this is really interesting. And is it having an impact on the resource juniors? Not really. The TSX Venture resource listings, which I track them all, their traded value is still 60 to 70% of total traded value, and it's probably higher if you exclude these few $100 stocks that shouldn't even be on the venture exchange. But what's interesting is that traded value has increased only modestly. Traded volume has increased a bit more relative to sort of baseline for the past couple of years, and average share price traded has also increased a little bit. But you have to look really hard to see any difference. Reality is this market does not believe that we are in a bull cycle. And this week we've also started to see the base metal prices go up, and all kinds of stories being told about how people are starting to buy base metals because of a hedge against inflation. But at the same time, we keep hearing that China's economy is the consumer consumption of goods is not picking up where the real estate building boom has left off. So it's kind of strange to see the base metal prices go up. We're not seeing yet the audience out there embracing the juniors as a way to play the sector. And I think unlike in 2020, where everything crashed in March, April in response to unemployment jumping to almost 15% in 1 month when the COVID pandemic hit, then gold rebounded very sharply after everything had crashed. Right now, we're watching these equity markets at their all-time high. Much of it is skewed by these big giant tech companies, and everybody's waiting for something bad to happen. And of course, when this does start to happen, we will also see gold come down, which is again a reason nobody really wants to rush into the juniors right now and risk it getting gold slammed back below $2,000, just as it did, got slammed way down in 2008 during when the financial crisis hit in September, October of 2008. It then bounced back afterwards, but that was a different story. So the market's waiting for some sort of train wreck or some other yet unarticulated catastrophe, a shock to the system. And frankly, in the 40 years I've been covering the resource junior sectors, when I look at the smorgasbord of potential catastrophes, system shocks that are out there waiting to happen, I've never seen anything like it. And yet nothing serious has happened yet. So in this type of context, what do you do if you're a resource junior junkie? Well, that's why the Arizona gold and silver is ideal for this type of situation for the reasons I've already described. Now, they picked up this Philadelphia project, which is in the western part of Arizona in the Oatman district in 2019. First, a couple of unpatented claims, and they acquired the key 3 unpatented claims, and eventually they staked a big land parcel around it. So it's a total about 900 hectares, of which only 3% or so is represented by these patented claims. Now, what's the difference between staked unpatented claims and patented claims? Well, patented claims are private land. These claims were created in the late 1800s when exploration for high-grade gold was going on. There were a couple of shafts sunk onto this Philadelphia vein, and down to about 700 feet, that operated on a small scale from 1915 until 1941, when the War Orders Act shut down gold mining, and then they flooded. Nothing was ever done after that until 1979 to about 1990, when several groups, including Crown Resources, which is sort of a predecessor of Solitario, and Meridian Minerals, amongst others, they drilled about 30 holes, most of them RC. They even did some small, historic resource estimates for the rising fauna. You can look up the technical report that Arizona Gold has done to get all these details. And this was quite pitiful, like 35,000 ounces calculated from the little bit of drilling that they did at 1.5 gram. Not very interesting at all. But what Arizona Gold has been focused on is that those 1,500 meters of strike length covered by these patented claims. And the patented claims are on top of the Philadelphia vein, which tracks the northeast trending Arabian Fault, and this vein dips about 70 degrees to the southeast. And they've drilled two of these have got a fair number of holes in. The one that is undrilled is the Resaca claim at the northeastern end. This is a big hole in this system. And on April 10th, they announced a 43 or a 26-hole program, 2,400 meters, mainly for that strip, about 500 meters or so. And this will build on the they've drilled about 111 holes, both R43 core and 68 RC since taking on this project in 2019. And all of these holes have had to be drilled from the patented claim because the surrounding land is all under BLM jurisdiction. And they didn't really in the beginning worry too much about getting the BL permitting because they could drill on the patented claim. But what the problem was, as they began to get high-grade gold and silver, stepping down these this Philadelphia vein, they could only get to about 200, 300 meter down plunge depth. To get any deeper, you had to step back onto BLM land. And that has been a huge pain. They initiated permitting in 2022, but this area is also characterized as bighorn sheep habitat. And so they've had to get this all sorted out, find out when is the calving season. Yes, it's from January until about April, and get all this other stuff taken care of. They think they're within, they're in that final sort of BLM response to comments period. Maybe they'll have the permit in hand by May. It's similar to where Solitario is with the Golden Crest plan of operations application with the U.S. Forest Service in South Dakota. They could also have it within a month if there are no problems. But until we get the green light, we don't know. But for now, this drill program will fill an important gap within that 1,500 meter strike. And what could it potentially amount to? Well, if you take 1,500 meters and take it to a 300 meter depth and imagine widths of 3 to 5 meters, you're talking about a tonnage footprint in the 4 to 6 million ton range using a 2.6 specific gravity. So that's sort of the tonnage footprint that they've poked holes into. With this final round of holes, when they have the assays and all that in late May or so, they'll be able to give us a resource estimate. And you're going to need a 2 gram minimum for underground mining. So let's assume a fantasy range of 2 gram to 5 gram. So at one end, you could end up with, say, 250,000 ounces for the smaller tonnage footprint at 2 gram, to as much as 1 million ounces at the 6 million ton footprint. So we won't know. They will know. We'll find out sometime in the third quarter, I hope, what the high grade resource estimate is. And keep in mind that the Oatman district has had a documented high grade resource of about 3.7 million tons, grading 16.5 gram per ton gold. That's almost 2 million ounces of gold. So if this 1,500 meter segment of this high grade vein is properly documented for the first time ever, we could end up with a very pleasant surprise. But again, up to 1 million ounces doesn't really move the needle for the market that much. It may be helpful for some of these other operations, such as the Moss Mine, which looks like it's heading into a bankruptcy or whatever, or reorganization. It could, if we end up with just this could end up being feed to get that operation going again, truck it down the road. But that's not where the big blue sky is, because while they were drilling back in 2021, they were drilling through the hanging wall of this low sulfidation epithermal system to get to the vein, and they got some pretty impressive widths, 116 meters of 1.34 gram per ton gold, 104 meters of 1.57 gram per ton gold. And this is, of course, on the western edge of the system, close to where daylights. Above it to the east is of course, in the typical low sulfidation epithermal system, there's like garbage rock. There's nothing there anymore. But they now suspect that there is a stockwork system beneath the boiling zone that could run 1 to 1.5 gram per ton gold. And the tonnage footprint that we're talking about 100 to 200 million ton footprint, all of course obscured by barren rock up top. And so part of the BLM application is to also get the ability to drill through this cover rock into this hanging wall stockwork, and then of course penetrate the vein deeper. And of course, once they start, they're not going to go for the deepest first. They're going to start closer to the upper part of the vein and go and see what's all going on there. So that's the potential for a blue sky outcome that is contingent on the BLM permit. If this blue sky bulk tonnage potential does not turn out to be validated by drilling, and it's too erratic or too low grade, there's still the potential to chase the Philadelphia vein deeper and see if the grade gets even better, because they have yet to find that depth where in a low sulfidation epithermal system the grade no longer is present, because these type of LSE systems have a vertical constraint as to where all the gold and silver drops out in the mineralizing system. The company raised $1.6 million in the past couple of months with a unit financing at 30 cents. They're all cashed up, and they're now in a position to deliver a resource estimate by the end of the year and perhaps show this enormous blue sky potential that's a byproduct of doing work on a system and starting to understand its geometry better and coming up with an additional scenario on top of simply taking the old mine workings data and then stitching it together with contemporary drilling, putting together a proper deposit model, and then coming up with a resource estimate and hopefully a plan to mine it down the road. So this type of junior Arizona gold and silver sits smack in the middle of the spectrum of gold stocks, from pure blue sky discovery exploration plays like Solitario Resources Corp with Golden Crest, and ounce in the ground projects like Hasbrook of West Fault Mining, waiting for the market or the big producers or even medium-sized producers to believe that we are in a new era of high gold prices, and then gobble up this company and put their piling up cash flow from the high gold price that they're enjoying to work building new mines.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.